Hey guys, Akil here with Tier 1 Trading, and I hope you guys had a very happy holiday. I know I'm a day late, but I want to do sort of a gift exchange with you guys. What I have for you is some pretty neat footage taken from my live trading room last week, talking about really how to become a better trader in the sense of what type of changes need to be made. Mainly traders think that big, massive changes need to happen for you to see more profit. And well, for some of you guys, it's true, depending on what level of trading you're at. But for you guys that have been consistently profitable, for you guys that are in sort of the boom or bust category that Mark Douglas likes to say, where you're kind of in the middle, where you're not really blowing accounts, but you're not really making enough money to get excited about to really make any change in your life. It's typically a very small change or the consistent execution of very small changes that will lead to a much bigger result. I know this helped me make the difference, make the change in my trading personally, and it's helped a lot of the traders I've worked with as well. So I want to share with you about a 10-minute clip talking about that topic. In return, here's what I ask for you. Each and every year, a good trading buddy of mine, Steve Burns, does a poll where he looks for Twitter or social media's most helpful traders, and he puts together a list. I would love to be on that list. So if you can lend me your vote, that would be the best Christmas present that I could receive. I'll leave a link in the description box below. I think the voting ends December 29th, so you need to get on it right away. But go to the link, check it out. I don't believe my name is on the list, but there's a write-in section at the bottom. If you can just write in at Akil Stokes RTM, that would be a massive help. So again, the voting ends December 29th. It means the world to me if you go out there and spend a few seconds to type my name in and see if we can get myself on that list. And I just want to say I appreciate it in advance. I hope you guys enjoy this video, and I hope you enjoy the rest of your holiday break. Take care, and until next time, plan your trade, trade your plan. If you're trading a strategy, it's important to take every opportunity that fits the rules. If you try to pick and choose which opportunities are quote-unquote good and quote-unquote bad, and that's just going to be based off how you feel day to day, to be honest with you, then you're doing nothing more than gambling. And you're doing nothing more than probably what you were doing before in the markets, before you started getting educated, where you're just like, this looks good, let's take it. You have to take every one. Because I would ask you this question. With any given trade, again, imagine you're trading your strategy. With any given trade, do we ever know that a single trade is going to win or lose? Do we ever know for sure that a single trade is going to win or lose? Of course not, right? If we did, we would invest everything on that single trade, right? If I knew a trade would win, I would push everything into the middle of the table. I'd sell my soul, right? Because I'm going to win, right? Why wouldn't you? So we never know. So if we never know the outcome of any given trade, why do we want to pick and choose which trade within our strategy we take and don't take? Would that make any sense? This is the thought process. Would that make any sense? It wouldn't make any sense, right? Why would we want to do that? All we can do is consistently execute the plan. So again, if I'm trading a strategy, if I have a strategy that let's say it's I'm 60% correct in my strategy. Now again, I don't, out of 10 trades, I know that I should get 6 winners, 4 losers on average. I don't know what those 6 winners look like. I don't know what those 4 losers look like. I don't know when those 6 winners are going to come. I don't know when those 4 losers are going to come. I just know that when I complete 10 trades, I should have 6 winners and 4 losers. So my only job isn't to try and choose, I think this one's going to be the winner. I think that one's going to be the winner, right? My job isn't to do that. That's like playing the lottery. My job is to take all of them. Trading's the same way. Obviously, the probabilities aren't as good. It's not going to be 99 times out of 100, but trading's the same way. You're taking an action. We don't know the result, but we know the long-term result is going to be in our favor. It should be in our favor as long as we're not sabotaging ourselves. High probability gamblers. I'll tell you what, it's not even, I wouldn't even call it high probability. The edge that we have in trading is very small. I mean, I've made no lie about my historic win percentage, right? I am about a 55% trader. My win percentage has actually gotten worse. Getting closer to 50%. This just could be a bad year. But I'm typically between 45 and 55%. So my edge, right, is very, very, very small. So it's not a massive edge we're looking for. We're looking for a very, very small edge, and we're just looking to exploit that small edge over and over again. If I can win 55% of the time and have an average risk reward that is, let's say, 1.5 to 1, right? You guys want to see what that looks like over time? Let's do a visual example, right? So here's my, let's say I have a very, very small edge in my risk reward. Let's make this something like this, right? Right? Can you guys see that? Very, very small edge in my risk reward. Give me a yes if you guys can see the chart. And let's just say I'm a 50% trader. So I win the exact same amount as I lose. When you look at this by itself, it doesn't get you all excited, does it? Does looking at this get you excited? Hey, 50% trader, and well, my wins are just a little bit more to my losses, right? Probably doesn't get you excited at all. But let's look at this number over 5 trades. Or 10 trades. Let's do 10 trades. 5 winners, 5 losers, right? We've got 5 winners. So 1, 2, 3, 4, 5. Let's look at our 5 losers. 1, 2, 3, 4, 5. Does that look better? Does this let you know how it's just a numbers game? And you can guess, right? The more you do this, right? The more 5 winners and 5 losers we take, it's just that gap is just going to increase, right? The gap is just going to get bigger. And this is you being a 50% trader with, again, the initial risk reward. If you look at this right here, it's very, very minimal. Now imagine if you had a 2 to 1. Imagine if you were a 60% trader, right? Let's just do that real quick. We'll keep the same risk reward. And let's just add 1 and take 1 away. Let's say you were a 60% trader, right? So you added 10% to it. So let's add 1 more of these green boys. That'll give us 6. Let's take 1 of these away. That'll give us 4. Boom. Very, very, very small differences. Very, very, very small differences. Let's say you do something, again, very, very small. This is the gap right here. Let's say you take this initial mark here, right? And let's just make it a 1.5 to 1 risk reward. So you're able to do something in your plan, right? You work on your maximum favorable and maximum adverse excursion, right? Where you're keeping your losses as small as possible without having them too close where they sabotage yourself, and you're maximizing your wins, your gains as much as possible without getting too greedy. So let's say you stretch this risk reward out a little bit and make it about this. What's that? 1.5 to 1, just a little bit. I don't know. I wish I probably would have been better. Let's do this. What was it before? 117.82, stretched out by just a little bit. Well, who cares about the numbers? Let's go back to the 50% example or the 60% example. 1, 2, 3, 4, 5. You've made a small adjustment. And this is an example of how small adjustments over time make big differences. They don't stand out in the beginning, right? They don't make you $1 million every month like what the internet wants you to believe, right? But to the consistent trader, 1, 2, 3, 4, 5, 6, to the consistent trader, if you can consistently, when you can consistently execute your trading plan, small changes can equal massive results. Now look at the difference. And what do? We maximized our risk by a little bit, or our risk reward by a little bit. Jumped and we have GDP coming out for the dollar now. And we're seeing everything take off. Canada news too. But you guys can see, right? Canada's going wild right now. Yeah, you can see small changes. So that's what I want you to think about, guys. It's not about the big, you don't have to make big, massive changes to see big, massive results. It's very, very small changes. And it's just like we talked about, I think it was a few weeks ago. I told you the story about how if we are talking about the deliberate success program I do, and if we change if we change the degree of our path by just 1%, how over years and years of walking or miles and miles of walking, we can end up in an entirely different place. You guys remember that conversation? By just a small 1% change in degree. Same thing with trading. A very, very small change in your trading, right, to become more efficient, you won't see the results at first. It doesn't seem like that much over your first, second, third trade because they're very, very small changes. But when you consistently do them over months and years, before you know it, you're in an entirely different place. And that's why trading can be a very profitable venture for many people. It just takes time. Same thing with money management and compounding, right? I've showed you guys the money management spreadsheet. It may take you a year to even change your position size. But once you get that ball rolling, before you know it, you're turning a 40% return into a 60% return. You're turning a 60% return into a 100% return, 100% return into a 220% return. It starts to roll pretty quickly. It just takes patience. And the problem is most traders don't have patience. Most traders want that instant gratification. And if they don't see these massive amounts of results at once, they quit and they go on to the next thing. Good trading takes time, guys. Remember that. Good trading takes time. Build your foundation now, reap the benefits later.